What's going on, guys? We're going to cover today's price action. Today was a nice day in terms of follow through, in terms of a trend. So essentially from the market open, we had a little bit of a spike on the initial 5-minute candle, and then we never took that level out. So when I started to see that, we failed to take out that little baby opening range 5-minute candle, we kind of came down and we chopped around for the first, I would say, 30 to 45 minutes of the NASDAQ open here. Once we lost that 20 SMA and then we lost that 200, that was pretty much it, right? That was like the start of the trend. So how do we kind of identify that? Well, there's a couple of things that you can do when you're reading price action, using your strategy to deliver you a little bit of an edge so you can make some money in these markets. And when you see that we put in this high here and we touch that big psychological level of 20,000, if we were to get over that 20,000 mark, we could have just as well seen a trend to the upside. Okay. So what I was looking for in terms of a move to the upside was a confirmation of 20,025, which was that opening range of the 5-minute candle high. And realistically, what that would have looked like was off the open, once the 30-minute opening range was done, even if we did not take out the 20,025, I would have been looking for the confirmation through that number, because that would have become the opening range high for the 30 minutes, which it was the opening range for the 30 minutes, but we failed to kind of confirm that price action and trade above it. Now, the story and the narrative has kind of been the same. Ranges pretty deep, right? They're pretty big, especially the first 30 minutes of the market. And we're doing a lot of consolidation, it's like a lot of choppiness. So what you're seeing is off the open, you're getting a big spike or a big red candle, and then it kind of reverses and then it chops around. Okay. We had news at the top of the hour. So 7 a.m. my time, Pacific Standard, had some news kind of come in there, some numbers. But you can see here the first 20 SMA play right now. This is my strategy that I use. Again, it's nothing revolutionary. It's nothing that is complicated. It doesn't matter if you have never traded the markets before. It's very easy to understand. Or if you've traded the markets for 25 years, it's something that you can incorporate into your tool belt when it comes to strategies and edges and taking these trades. So realistically, what we're looking at here is price action to confirm over or under the 20 SMA to kind of give us that short-term change in trend, right? Now, this strategy does not do very well when we are chopping. It does a lot better when there's a trend that is developed and that is formed. So typically speaking, if you look at the 200, which is this yellow line, and you look at the 20 SMA, which is this purple line, you can see here in the pre-market, these two moving averages are essentially flat. So what's going to be difficult off the open, especially when there's no trend that has obviously been able to form because the market's not open yet, those trades tend to get people in trouble early. So over the years and over the time, what I've done to kind of protect myself is lower my price targets down in terms of what I'm looking for as far as a take profit. And to be completely honest with you, for every one mini contract that I'm trading, I'm only looking for 5 points. So if we get this close below the 20 SMA, and that's a level of demand, well, I'm looking at my next level of demand be the 200 SMA. I know that if this confirms, which it did at 650, that I need to get out or look for my 5 points before we tag this 200 SMA. Why? Because if the 200 SMA is acting as a level of demand, that's another word for area of support. So the last thing that I want to do is be in a position that comes down into the 200 SMA and it gets a hard bounce where I give away all my profits. So I've got to be very, very quick at taking those profits. And again, because it's early in the day, we don't have a trend that's developing. We don't see all this price action. We don't know that all of this is going to form. So it makes it very difficult to kind of identify if this move is going to hold or not. So what's helped me is giving myself a small price target of 5 points. Just kind of the way I look at it is like dipping your toe in the water before you jump into the swimming pool, right? Is it warm? Is it cold? And then once you're in, it feels okay. But it's always that first step or two that, is a little chilly, right? So I don't want to, for one, oversize myself in the first 30 minutes. And two, I don't want to be too emotionally involved in what result or outcome happens. If I lose, that's fine, I lose, but at least what's going to happen is time's going to pass and I'm going to see the price action start to develop. Now, you can see this move here gives you a quick 5 points and then immediately reverses and closes back over the 20 SMA. However, with such a small price target of around 5 points on that one mini contract, in this particular situation, we're able to grab another trade long. So realistically, before there's even a trend that's developed, you're able to kind of sneak in the back door, grab 5 points here, grab 5 points there. Now, for some of you guys, you know, making $100, $200 is all you need. So essentially, you could have walked away from the market within the first 30 minutes of the day. Now, if you're trading small, which I definitely recommend a lot of people to do, especially if you don't have years of experience under your belt trading mini contracts, I would definitely recommend anything between 3 and 5 micros. In that particular scenario, taking 5 points on, let's say, 3 micros is only going to be around a $30 profit. If you're trading 5 micros, it's going to be around a $50 profit. Now, again, I understand that's not a lot of money. A lot of you guys want to make, you know, big flashy gains, $1,000 a trade, $10,000 a trade, $100,000 a trade, right? I get it. We all want to do that. But for the sake of your sanity and for the sake of your trading account and for the sake of your longevity in this business, I would definitely recommend anything between 3 and 5 micros, taking profits between $30 and $60 when you get it. Right now, it still kind of remains a see green, take green market. There's definitely ways that you can kind of enhance your strategy to hold runners, right? For example, I've got a method to, you know, hold runners in my particular strategy if I'm playing, let's say, 1 or 2 micro contracts. For example, on this particular short setup here, this, you know, before we actually, you know, put in this big move, if you were to put a stop loss over your reason why, okay? So if price action breaks above it and closes above it, you just stop out. If you were to keep that original stop loss, you essentially would still be in the trade right now with about an hour left to close, okay? So you would have been in at a price of close to 20,000 and currently we're trading at 19,594. So you would have made almost 400 points on this move, which is an $800 trade on, you know, just a couple of micro or whatever, right? So again, you can definitely catch a lot of money trading micros, but what it takes is a lot of discipline and it takes a lot of hold times and it takes a lot of moves like this to happen, like big extended moves, which don't happen every single day. Okay. So you might catch one of these trades every 2 weeks. You might catch one of these trades once a month. I don't know. But again, if that's your forte where you don't like to trade heavy size and you can't withstand the volatility, the big swings up $200, down $200 by trading minis, then definitely maybe you can try to squeeze out a little bit more profits trading those micros. Now, another way that I like to do it to make it risk-free is, let's say on this particular short position, once you get into the position here, and once you start to go into profit and you sell for your profit, you can kind of move your stop loss to break even. In this particular scenario, this would have been stopped out at break even. So again, you know, it's tricky to do. You know, you kind of have to, like, maybe you can put your trailing stop in the middle, right, of your original stop loss, kind of just trail it down. Each candle close lower, just kind of continue to trail it down to the middle of the range, and then kind of trail it down to the middle of the range until you either A, get stopped out, or you just keep taking those profits off the table. Again, I don't particularly hold a lot of runners. You know, when it comes to trading futures, I do it very, very well when I trade options, but in futures, you know, I'm more of a see green, take green type of guy, right? The strategy is going to operate at anywhere between a 70 to 80% hit rate. So what that's telling you is that, you know, over a course of 100 trades, you know, you're going to average, you know, 70 winners and 30 losers. Over the course of 10 trades, you're going to average, you know, 7 winners and 3 losers, around those numbers, right? Give or take. The only thing is that you never really understand or know when those 3 losers are going to come in that series of 10. So they can come off the rip, where you take one losing trade, you win a trade, you lose, and you lose. Or you can go on a string of winning trades where maybe you took the short and you won this first trade, and then you took the long and you won this trade, and then you took the long and you won this trade. That's 3 winning trades in a row, and then 4 winning trades in a row, and then this one here, I don't even know if this hit for 5 points, but for the sake of a video, I want to make a point here. So 660 was the long, and it actually went up to 75. So yes, you would have even made it here. But let's just say, for the sake of the video, right, let's say you took the short position here, you won, you took the long position here, you won, and then here you lost. Okay, great. So you won 5, 6 trades in a row before you hit that first losing trade. So again, you never know when those losing trades are going to come, but if you just stay patient and you trust the strategy, because the big problem that I see a lot of traders having is that they fall into a little bit of a rut where they're trading too many contracts, they are taking big losses that they don't want to take, and then they start second guessing the strategy or themselves or the market altogether, and they're hesitant and they don't execute on trades when they do get the opportunity to. The thing is this, guys, these charts, this market, they have no idea if you lost or won your last trade. Okay, it has no idea if you're on a 100 trade win streak or a 100 trade losing streak. Okay, it doesn't matter and it doesn't care. The market has no idea. So when you see your setup, the biggest enemy that you have is yourself, because you are the one telling yourselves, well, the last trade I took, it didn't work, and maybe I should size up on this one to get my money back. And you start going against the grain of just identify the setup, and if it confirms, get in, and realize that whether you win or you lose, the market doesn't care and it doesn't matter, because this whole process is on a big scale. It's on a big block of 100 trades, 200 trades, 1,000 trades. So what we need to do is get through the numbers to allow the probabilities to play out. Now, how do you know if your strategy is going to hit at 60% or 70% or 80%? Well, you got to take trades, right? So for me, if I look at my numbers here, I've got it on another monitor, but if I look at my numbers for the month, and around 90% of the trades that I'm taking are these 20 SMA plays. I've got data. Let me go to the month here. I've got data for 64 trades so far. So this month I've taken 64 trades, and the strategy is at 82% win rate, around 5-point take profits. So with that being said, what do you got to do? You've got to trust the system. You've got to take the trades, and you've got to run the numbers, right? You're not going to win every trade. Okay, that's a fact. I think everyone here knows you're not going to win every single trade, but what you can't do is when you do lose that trade, is start to fall back on your system, like fall away from it, right? Continue to take the numbers and let the numbers play out. Again, this is a very simple strategy that a lot of you guys can use. The only other real strategy that I like to, or indicator that I like to use with this, is the 200-day moving average. I just like to kind of see, where is that bigger trend at? Where's that bigger supply and demand at? And you can see here, once we lost that 200-day moving average, we really consolidated for about an hour, just hovering right underneath this 200-day moving average. Now, one thing that would tell me that maybe there was a potential bounce to the upside was maybe a break and close over the 220-day moving average, and then I would be looking at that $20,000 price target again. But since we did not, and we failed to get back over it, well, maybe I should kind of just still hold on for the short side here, right? Now, when they're this extremely close together, we want to stick with the side of the trade that were under or over the 20 and 200 SMA. Okay, when you see the 20 get extended away from the 200, then maybe you can start thinking about, well, I can take a little scalp here because we do have room to bounce. Even though it didn't get here, we have room, right? Like it's still a hard trade because essentially you're stepping in front of a freight train. But if you are one of those scalpers that tries to catch every single opportunity, then you could have definitely scalped along here and even scalped along here. All in all, I like to kind of stay with the trend if I can see the visible trend. But again, we're human. Sometimes we get a little trigger happy and we enter into trades going reverse trend, which is completely fine. You just can't be looking for, hey, I'm expecting this trade to hit 20,000, right? Like, let's be realistic here. Again, bulls are in a little bit of trouble right now. Just to kind of give you guys some context, we're below the 50-day moving average, which we've lost. We only were able to reclaim it for around 2 to 3 days. Typically speaking, when you reclaim that 50-day moving average on a daily time frame, you like to see that level hold, even if it's just going through distribution for a week or two. You want to see us hold that, and we failed to hold that level. So, you know, we could be looking at lower prices. Again, 8-9 days straight up in a row. I think the market just moves a little bit too fast to the upside too quickly, without any significant pullback. So this is the significant pullback that you're starting to see happen here. With that being said, if you guys want to trade with me each and every single day live, that link is down in the description box below. Also, guys, right now Apex is running an 80% off sale with a lifetime $85 activation fees and 1 day to pass. So load up. Let's pass some of these evaluations. Let's get our funded accounts and let's trade them smart, and let's start taking some money out of these prop firms. I'll see all of you guys on the next video. Make sure to like, comment, and subscribe, and I'll catch you guys all next time.